Welcome. In this today's video, we will be discussing on several points related to money printing. First point I want to make is that under the new Central Banking Act, there is no room for direct monetary financing. This means that Ministry of Finance cannot influence central bank to finance a budget deficit through direct money creation. This practice is now prohibited under the Act, and it has not happened since 2023 and will not happen again as well. Having said that, central bank still has a responsibility to manage day-to-day liquidity in the domestic rupee market through open market operations. It is important to note that these operations are not related to direct monetary financing. They are simply aimed at providing sufficient liquidity to the interbank market. These operations are part of current monetary policy framework, which focuses on maintaining liquidity and managing short-term interest rates. Central bank's primary objective through these open market operations is to target short-term interest rates in the interbank market, which is the call money rate. This is the rate at which commercial banks lend to each other overnight. Central bank's goal is to keep the call money rate within a range that they believe is most appropriate for current stance of monetary policy in Sri Lanka. Key point is that monetary policy transmission occurs through the management of the call money rate. This is the tool that central banks around the world use to infer short-term interest rates and guide monetary policy. It's a traditional approach and not a new approach for central bank. With the inflation targeting framework now in place, central bank has established clear policy for managing liquidity and maintaining short-term interest rates at levels that are consistent with broader goals for inflation and economic stability. This is a completely independent process, and the central bank is free from any influence or pressure from external parties, and there is no fiscal dominance or external influence over open market operations. So, when central bank carries out open market operations, primary objective is to manage short-term interest rates, specifically the call money rate, within the target range that we or the central bank deems appropriate for the overall stance of monetary policy. That is how they manage monetary policy transmission into the broader economy. There are several ways that central bank injects liquidity into the market. One of these methods is through forex operations. When CBSL purchases forex from the market, it injects rupees into the interbank market, thereby creating liquidity. Additionally, other factors like currency in circulation, when currency flows out of the system, it can create a liquidity deficit in the interbank market. Furthermore, credit deployment by commercial banks can also contribute to liquidity shortages. To manage these, CBSL continuously assesses liquidity on a daily, weekly and monthly basis. Based on these assessments, they plan the necessary interventions in the domestic rupee market, which CBSL carries out independently without any influence from outside parties. Nevertheless, some people may think regarding to the central bank interventions, and they may misinterpret those interventions as money printing. Through CBSL operations, they are careful to avoid unnecessary monetary expansion, something that occurred before the enactment of the new Central Banking Act. Under the old system, when the Minister of Finance could directly instruct central bank to purchase treasury bills, there was a little control over monetary expansion. However, under the new framework, CBSL no longer engaged in direct monetary financing or purchase treasury bills directly from the government. Finally, even within open market operations, central bank is mindful of the potential for excessive expansion of the monetary base, and central bank carefully considers long-term implications of any intervention, even when they focus on short-term objective of maintaining appropriate short-term interest rates. With that, we will be concluding, and thanks for watching.